Good afternoon, everybody, and welcome to today's post-market analysis video. I'm going to make this video short, so I'm not going to go into too much detail. We did have a very interesting day. Now, again, if you look at our pre-market report, I've been talking about this for days now, saying that based on my calculations, February 11th to 12th may be a pivotal point in the markets. So something unusual may happen there. The market may act in a strange way, or we may see some sort of a reversal or pivot or something that is a bit unusual. Now, we did today find out that the United States will be involved in the effort against ISIS. So I don't know if that's what it is or not. Again, we still have tomorrow, so we have to see whether there might be something going on tomorrow that may have an effect on the markets. If there isn't anything, then it must have been the president's announcement today, and that's how I look at that. The market was very whipsawing. The market was whipsawing today. It was extremely volatile, especially in the afternoon session. But let me just go real quick and walk you through the day what happened. So if you go here is where we opened. We had a slight gap down at the open. Then we tried to come into yesterday's closing price. We couldn't get above that area. We went back down, tried again couldn't. Then we based sideways in a bullish consolidation, and we had this candle right here, which was a sign of a topping candle. In essence, we tried 3 times to get to this to yesterday's highs. We couldn't, and therefore this bullish pattern failed. And when that happens, we go down very sharply. That's what we did. We came into this support area right here, which was the bullish consolidation from the day before, and this ultimately was support in addition to the 200 moving average, which is this red line. And then we had a very strong move up, so it was a very quick move. So the afternoon session was very volatile, very unpredictable. And again, let's read this again in the pre-market report. I hope you listen to this. Be careful with both longs and shorts, as these next 2 days the markets may be a bit unpredictable. I mean, it doesn't get any more clear than that. So hopefully you didn't find yourself on the wrong side of the trade. Now again, if you were a bull or a bear, you had difficulty this afternoon just because the market was whipsawing back and forth. And again, a lot of this was based on what was coming out of the White House. But overall, and I'm going to be very careful in how I word this sentence, but overall, there was somebody who didn't want the markets to sell. Okay, so no matter how you would interpret us going to war. Now, I don't want to say war because it's not really going to be a war, more of a mission to take care of a problem that, in my opinion, is long overdue. But either way, the market thought of it as a positive, or rather as a non-event. And it's interesting because we were so concerned with this tiny little country across the Atlantic called Greece. And yet, when something about our own country here in the United States gets announced, the market does very well. So overall, the market wanted to stay up today, and it did. Now, it did close negative to flat, so I'm not going to make a big deal out of it. But based on this move, this failed pattern, which had potential to go even lower just based on failed patterns like these, it was still a very impressive move. And even if you look at the after hours, the market is just ripping higher. The VXX has plunged drastically. So we have to respect what we see, and right now this means strength. Now, we do need to see follow through, because today was a light volume day, so it was very easy to take it one way or the other by a minimal amount of participants, and therefore we need to ensure that tomorrow we have some sort of follow through. And if you go to a couple of days ago, let me see, this I believe was the 9th. Give me 1 second to find what I wanted to find. So if you look at the 9th, let's compare the 9th to today. So the 9th, and again it's a little bit difficult to see because you don't really know where my days are starting, but the 9th would go from here to here, and then today would go from here to here. So what did we have on the 9th? We had an initial gap down. Then we rallied, okay, strongly into this area right here, which we were trading into a level from the day before. So we got to that level, 3 green candles up. We had a wick that pushed higher but couldn't take out this this high right here. Now it's not that daily high, that intraday high, but it's nonetheless a pivot point. So 3 candles up, couldn't take out or close above that pivot point. Then we had to retrace. We came back into this double bottom. Then we tried again, second time, couldn't close above. And what we ended up doing, having a bullish consolidation sideways, which should have taken us into a breakout, but it didn't. So we put in this topping candle right here, and after trying 3 times to get above this pivot point right here, the market ultimately again had a failed bullish pattern that sold off into the 200, bounced a little bit, went down into the trend lines we had, and then had a little bit of a move higher into the end of the day. Now, why am I telling you this? I'm telling you this is because it's very similar to what we had today. So compare what I just talked about from the 9th. Let's look at today. We had the same thing happening. However, there was a little bit of a change, and I want to emphasize that. So today we gapped down right at the open. Then we went back and we touched the low of the candle, the close of the candle from the last 10 minutes of yesterday. Then again, look at the similarity. 3 candles, okay, and we did try to come into this pivot point right here, but here we were a little bit weaker, right, because we didn't get there. Ultimately we retraced, okay, then we based sideways for just a little bit. We had 3 candles sideways, same thing here, we had 3 candles sideways. Then we had a couple of candles to the upside, okay, and we tried again to get into that level right here. Again, we had the same thing here. We tried a second time, couldn't do it. So we based sideways here for a bullish consolidation. We did the same thing today, sideways for a bullish consolidation that ultimately failed, okay, and went underneath this orange line, which is a 20 moving average. Same thing here. We had a little bit of a bullish consolidation above this 20 moving average, which ultimately failed, okay, and we went into the 200 moving average and even lower than that. Here we came into the 200 moving average, but we didn't tag it or go below. And then ultimately into the rest of the day on the 9th, we had a little bit of a pop into the end of the day. Now notice how there's a lot of similarity until about midday, but then what we want to pay attention to is what happened after this bull flag failed. So here it was a more drastic move and just a minimal pop into the close, right? Today it was the opposite. Now granted, the bull flag failed, so that's still a negative for the markets. However, it was a lot better than what we had 2 days ago. We had 4 candles down. Notice how we didn't even touch the 200 MA, and then we took out, erased that entire move down and went up, okay, and essentially just based on this move we closed flat on the day. So again, this is us talking about a potential change in character. Remember how we were talking about having a few Fridays in the last couple of weeks, and how we had these late afternoon sell-offs, and the first Friday was a very severe sell-off, then the second Friday was an intermediate sell-off, and then the last Friday where we had a sell-off, it was very minimal and rather late in the afternoon. So we're seeing a progression towards less volatility. So if you compare today to the 9th, yes, we are still seeing a similar behavior, but notice how when that bull flag failed, the market behaved differently afterwards, so it was less severe of a pullback. Now granted, as I said, somebody may be trying to keep the markets up for whatever reason, and so you need to see some other signals confirming, hopefully tomorrow. But overall, when you have two very similar days and the outcome is different today versus on the 9th, that just means that now this is a little bit stronger. We have another signal that there might be a potential bullish move coming up. Now again, as I said in our pre-market report, the market may give us a couple of negative days, and it may give us a couple of doji days or pause days. Again, that is not reason for concern, because it may need time to get to those all-time highs. And again, usually when you saw those intraday swings, and again having them today and then on the 9th, when you see those sudden swings, yes, you may look at media and whoever's on TV and maybe the president saying something. Okay, you can look at all of that, but ultimately that is a sign that we have reached a top. Now, it doesn't necessarily mean that we're going to sell off right here. It's just a natural reaction in the markets. It's kind of like when you go swimming, right? And the first time you go into the swimming pool, you just have to jump in, right? And then you kind of pull back because it's cold. And eventually you need to get acclimated a little bit. And so the markets are the same way. So right now the markets are testing their highs yet again, and so the more it tests it, the more the market tests these highs, the more acclimated it's going to become, right? And so you are still seeing that kind of sudden pullback and a little bit of indecisiveness, a little bit of volatility, but eventually, if the market wants to go higher, it's going to get used to these upper ranges. So when you have a bull flag, for example, it's going to stop failing, and the bull flag will actually follow up, and you will have a breakout. So look for those signs. Again, comparing today to the 9th, that was a little bit of a sign. It wasn't a major sign, but that's just something that we need to pay attention to. Now, ultimately, money is coming out of bonds into the markets, the stock market, and so it appears that we will see that upside in terms of hitting that all-time high. But again, it may not happen tomorrow. It may just need a little bit of time. And there is also a possibility that we have a little bit of a pullback. So I'm not ruling anything out. How we get into that level, I'm not sure. Nobody really knows that. But based on what I'm seeing right now, again, another solid day. It is possible that we get to the all-time high one more time and potentially surpass it. Again, my near-term level on the SP cash is 2140. Now it's ranging between 2100 and 2200, and I'll have to calculate based on how we get there. But that's my preliminary preliminary level. Now, if we get there or not, I don't know. It may be that we tag that level later on in the spring or maybe summer, but nonetheless, that's what I have calculated. I don't know the story as far as how we're going to get there. So just sit tight, look for the market to give you signs. That's what we have so far. And I also want to look at some potential support and resistance levels to see how good or bad they were. So what we have here is a little bit of a, now one of the resistance levels did get tagged, but again, I want it to be a little bit conservative today in my levels, and notice how a lot of the resistance and support levels weren't really near the levels where um, the markets were trading. And again, I wanted to be a little bit conservative today just based on that February 11th and February 12th date that I had, and I think I made a good decision. If I had given you one of these intraday levels, right, and we had all this indecisiveness in the markets, then maybe you would not have done really well in that trade. So I think I did well in that regard. But let's look at one of the levels. One of the levels, I believe, was let me see here. I always have to figure out where the day is. So today was just this level right here. So we gapped down, okay, and then tried to come back, and then it was this 206.90 level, which 206.81 to 206.87. I think that was the only level that got tagged in terms of support or resistance, and we came off of it, so it did serve as resistance. And there was another level, okay, even though it was a minor level. It was the 205.82 to 206.04, and that appeared to be today's low, okay. So we got there. Let's see if that level got tagged. A couple of days ago when we had the other level, it got tagged within 3 cents. So let's see about this one. This candle, the low was 205.83, and how well did we do? 205.82. Oh, okay, I see. So we would have missed it by 1 cent. Well, if you got it, congratulations, you basically picked the bottom. But if you didn't, well, we almost made it. We missed it by 1 cent. But sometimes it happens like that in the markets, and you have to be prepared for that. But anyway, so as you can see, these pre-market reports are very useful. So make sure that you check them out. I usually have them out by 9 p.m. Eastern, 9 a.m. Eastern, excuse me. And we will take it one day at a time. Again, tomorrow you want to see at least the markets being calm, okay? So the reason I say that, again, I'm not so much convinced of this move in the late afternoon. Again, there was a lot of light volume. Notice how this up move, this stretch right here, was on extremely light volume, whereas the sells did have more volume. And so I'm still not convinced of this market in terms of what happened this afternoon, and I want to make sure that tomorrow it stays up, okay? So I'll keep you posted in terms of the pre-market report. I still haven't done a lot of analysis today in terms of what was going on in the market overall, and I will try to give you guys more detail tomorrow morning.